And we're here today with Nicole Brewster, Director, President, and CEO of Renforth Resources.
Yes, thank you. Pleasure to be here.
Absolutely. Thanks for joining me in the backyard of my new home.
Yeah, lovely backyard. Bit of a windy day, apologies, but...
Yes, it is a little bit of a windy day. We're more than 6 feet away. We're doing our social distancing interview. I've wanted to interview Nicole for a while, but you know, this was something that we had in mind. We didn't want to do the studio thing. And I'll always remember the first call I had with Nicole, because right now we're in my backyard. And the day that I found out I was getting our new place, it was the day that I spoke with Nicole pre-PDAC. And you guys are, of course, a client of FTMIG's, and we're very proud of that. And I would just like to remind our audience that, you know, I can't give advice, but I can talk about what I'm doing and what I've done. And my biggest success in the markets was buying a 3-cent stock currently where Renforth is. Your stock is sitting around 3.5 cents today. Funny enough, there's over 1 million volume. But yeah, I wrote a stock from 3 cents all the way up to 80 cents. Of course, I didn't sell at the high, but it put me in a position where I am now.
Yeah.
And you know, we were just talking before I introed you about the Bank of America's report, basically saying over the next 18 months could see $3,000 gold. And it's of course very possible, especially when you look at the landscape currently, and you know, all the printing of the Fed. It seems like the big millions are made in the juniors. You know, the big producers, they might move even 2-3x, right? But the juniors are high flying, 10x, 20x. So
and approachable, accessible to people. Yeah. Juniors are the place where investors can get their start, like you did.
Yes.
Not wanting to spend, you know, you buy a producer $80 a share versus buy an exploration story that's in the pennies.
Yeah.
Spending the same money, your leverage is far higher in a penny stock than it is in a many dollars stock.
That 3-cent stock that I bought, I think I started with $5,000, and then over the course of like a few weeks after that, I started really upping my due diligence. I ended up putting $50,000 in, and so I had a really good position. And so, you know, if you're a retailer and you only have $1,000, $2,000, even $500, these are the type of stocks that you can get to know people through interviews like these, and you know, who knows what will happen here, but if the price of gold, you know, close to double, the exploration companies, they're going to have a lot of money handed to them to find gold. So maybe let's talk about that. Let's where do you want to start giving us like an overview of the company?
So Renforth, gold exploration company, but we're not only exploring, we're determining how many ounces of gold or how far the strike of mineralization on our properties goes. We have the assets, they're wholly owned, and we have gold on the assets. So we're not wandering through fields trying to find the gold.
Right.
So for a company like us, the appreciation of the gold price does a few things. In that we're looking to start to do some mini bulk testing and that sort of thing. A higher gold price, if we end up selling whatever we produce, is a good thing. But really what it does is it focuses the industry. You will start to see exploration companies being taken out for the ounces they've identified.
Right.
As you de-risk the asset, which is my job, it becomes more attractive for acquisition, which is where shareholders benefit, either through the sale of the asset or the takeover of the company. In the case of the sale of the asset for Renforth, I'm a very large shareholder, so were we to sell one of our assets for a significant amount of money, I'd like to see some of that money dividended out to shareholders and some staying in the company to fund further definition work on one of our other assets.
Well, a couple of things there. One of which my mentor always told me, you know, and anyone can have my mentor as your mentor. His name's Robert Kiyosaki. He speaks a lot about not working for money, and you don't work for money. That's what's amazing, is you don't actually take a salary.
No, we don't get paid, neither the CFO or myself. And I've been doing this for almost 7 years. He's been doing it longer, but neither of us get paid money out of the treasury. Of the money we raise in Renforth and the shares that are issued for that money, 90% of that money goes into the ground on our assets, defining our assets. The balance pays the exchange, the lawyers, the insurance, and the accountants. So do I work for money? No, I don't work for money because money is finite. Money will only ever be whatever is printed on the bill. That's all that money will be. For me, I like risk. I take shares as payment. I'm a very large shareholder as a result. I'll benefit as the shareholders will benefit. But I do think the shareholders will benefit, and the potential of the shares is far higher than the potential of $1 sitting in my bank account.
Right.
That almost costs me money at this point to have $1 sitting in my bank account.
Well, they're printing at a rapid pace right now,
Exactly.
devaluing that thing.
Yeah.
So basically, as you add value, as the company adds value, your shares go up, and eventually, if you get taken out or whatever, you'll make bank on that. Which
Right.
I think you're going to do very well. What percentage of the company do you own right now?
Myself, about 3% personally. However, I have interest in a consulting company, which is actually who my services come through. And that consulting company is pretty close to owning 10%. Well, 8% of the company, 8% of the shares. So myself, I stand to benefit
Right.
very nicely when we get there.
When you get there, yeah. So if it was a 10x situation, you would be worth a lot more money.
Exactly.
Do you know what your average is as a shareholder? Your cost base?
So that's a good question, and I'm going to tell you a story to answer it. When I became president, it was because my job was as an exploration contractor. So as a contractor, we did the Ring of Fire discovery work. We drilled those holes. I ran that camp. Renforth at the time was up there under a different president looking for diamonds, and didn't pay us a significant amount of money in the contracting company, which we were out of pocket for, because that's real business, that's real money, and it wasn't chump change. So the contracting company settled the bulk of the debt at about 22 cents a share, and then the very remainder of the debt at about 10 cents a share. I got frustrated with, and I did the deal because New Alger was an option in Renforth at the time.
Right.
They let the option lapse. It wasn't in good standing. But I believed in New Alger, so I did the deal, got frustrated, became the president, and one of the first things I did was consolidate the shares, all of mine included, 5 for 1. So my average cost of, say, 15 rolls back by 5, so it becomes 75 cents.
Right.
So a lot of paper is at 75 cents. Subsequent to that, my salary or my services have been paid. They've been exchanged at the rate of 5 cents per share, but Renforth's been trading below 5 cents per share.
Yeah.
So if the exchange is at 5 cents, Renforth's trading at 3 cents. I'm not doing that math in my head, but that can tell you the haircut that's been taken on the fees as well.
So essentially someone can go onto the market and nibble and take a position under your average.
Oh, well under my average, because if you do all of the math, my average is still sitting well above 20 cents.
Right. So you're underwater, and you're putting all this time in.
Underwater and building the company like a fiend nonetheless, yes.
Well, you must be super passionate about what you're doing then.
Yeah, and I see a lot of, I'm not shy, I'm doing this to make money, and I see a lot of potential to make a lot of money, because we're going to get what for me will probably be the biggest bull market of my career.
Right.
We will come into a bull market for mining in general, gold in particular, and that's where you see, and again, I can't give financial advice at all, but that's where you see the junior mining companies, the junior exploration, the penny stocks give back.
Yeah.
That's where the phrase 10-bagger comes from.
Yeah, exactly.
You're not looking for a single-digit percentage return. You're looking for multiples.
Yeah. And all you got to do, friends, is just, there's a podcast, there's many podcasts I listen to. I constantly consume content as creative. The weekly wrap-up with Eric Sprott is a fantastic one. I basically listen to it every Friday. If I miss it, I'll catch it on Saturday. But, here's a guy he's a billionaire, but he'll tell you, these large producers, these developers, yeah, they'll do well, they'll move, but I got more of a risk appetite, and I want to be in the juniors. So again, this is definitely an opportunity where you don't have to per se put a lot of money at it.
Nor should you necessarily. You should operate within your risk tolerance. It's the risky end of the game, but it's the end of the game where the returns equal the risk.
Okay, so again, let's overview. How many assets do you have? How many properties are there?
There are 5 properties wholly owned within Renforth.
Okay, maybe just run them down, all 5 briefly, and then let's talk about your main focused assets, the ones that you're.
Okay, so 5 assets, and I divide them into definition and advanced exploration.
Okay.
Definition being the more developed assets. So we'll start at the bottom end and work up. We have a property called Dename Persian, east of Val d'Or, large land position, nice gold numbers on it. It has been optioned out to another company, so I don't talk about it. The other company can earn 80% of it. We'll see if they get there. Assets that I do talk about that we're actively working. Advanced exploration, and that means that there's mineralization on the property. We have not yet defined how much mineralization is there. So the first one we have is in Ontario. We have a property called Nixon Bartleman. It's 4 patents surrounded by a bunch of state claims. In Ontario, for investors, patents are important. They do not come under the Mining Act, and they do not come under the treaties. So they have all the rights attached to them. So we have unfettered access to the patents. And we have 500 meters of gold on surface, stripped, sampled, really nice specimen hand sample picture on our website of that gold. So that's the one. We will be back this summer. We haven't worked that property since 2014. We'll do some more work on it this summer. Malartic West, it's in the town of Malartic. It is a huge property. We have the entire western side of the Canadian Malartic mine. We are their neighbor. But on Malartic West, we've done a few things. We have gold in drill hole, we have gold on surface. We made a copper-silver discovery. It's copper and high-grade silver. It's over almost 200 meters on surface. Pure discovery. It's in a, we don't know. We don't know much about it yet. More work to come. We will be working on that this summer. As well, we increased the size of Malartic West in the southern portion of the property, and we've actually tied up a 20-kilometer trend, magnetic geophysical trend, and at either end it's zinc and nickel, which are not commodities in favor right now, but they are, they're industrial staples.
Nickel's one that's
nickel and zinc. We need them in the electric vehicle revolution, batteries. That's a whole different conversation we're not going to have.
Yeah.
But we have a 20-kilometer trend at either end of it.
Yeah.
So we have to do some exploration there. So that's Malartic West. Again, it's mineralized, it's advanced exploration. We'll be back on it this summer. So then we have our 2 resource properties. We have Parbec. It's on the Cadillac Break, about 1.8 kilometers. Cadillac Break runs from Kirkland Lake past Val d'Or. It's the largest and best mineralized gold structure in Canada. So that's primo real estate. That is tied on to the Canadian Malartic mine. We have a gold deposit there. But the more interesting thing we have is Parbec has part of a structure. Canadian Malartic has the other half of it. It's an old mine called East Amphi. Canadian Malartic has 3 drill rigs on East Amphi, or they did a couple weeks ago. They're probably still there because, we're not working in Quebec. They have 3 drill rigs testing their data, and they're looking at what they can see of our data. So they're trying to put a story together there. So we're kind of hands down on that and let them spend their money right now.
Yeah.
And then our keystone asset is New Alger. It's the reason I got into this company. It's probably a little over 1.4 kilometers of the Cadillac Break. It's just outside of the town of Cadillac, Quebec. It is contiguous to the historic O'Brien mine, which produced 500,000 ounces at about 15 grams per ton to a depth of 1,500 meters. We have on the break the former Thompson Cadillac mine, which only went 340 meters down, only produced 21,000 ounces from a couple of stopes in the late 1930s. Then, of course, world history marched on and mining ceased. Our other neighbor to the north is Agnico Eagle's crown jewel, the Laurent Mine complex.
So I got to stop you because it sounds like you're just surrounded by producing mines.
We are. We're right in the nuts of everything. We're right inside of Agnico's assets. They're our neighbor all the way along, and then Canadian Malartic is half Agnico, half Yamana. So we're right in Agnico's backyard.
So again, as the price of gold and silver rises, and these companies, if they want to just advance their own properties, they might just take a look at their neighbors.
Precisely. Their job is to sell gold ounces. They're a factory. Gold comes in the back door in rough rock, they process it and refine it, and gold ounces go out the front door. They need to keep it feeding in the back door, and it's cheaper for a gold mining company to acquire an exploration company than it is to do pure exploration.
Yeah.
So
they let you do that work.
They let us do that work. They let us de-risk it till they reach their comfort level, which they don't communicate to us what they're looking for, but they're looking for something.
Is there a mill around?
There are numerous mills around. So New Alger, we've got the 1.4 kilometers of Cadillac break, but just 250 meters south we have the discovery veins, which we stripped. We know they go for, we've sampled them over 500 meters. We see geophysics that extends them past a kilometer, but we've stripped them over 275 meters. So as you know, the rock is like the rock we're sitting on here. It's absolutely naked. It's beside the Trans-Canada. Pull off sometime and go stand on the gold in the Cadillac break on the discovery veins.
Yeah.
But your question about mills, they're within kilometers. They have capacity and they need the ounces. We're planning on doing some mini bulk sampling, some blasting for a couple hundred tons, and we're going to get that custom milled in Quebec. This summer is the planning. We have to wait for the ability to work to open up again, but that's our plan, and we will be processing that for the recovery of gold ounces.
Beautiful. What if I was a new shareholder, I took a position today, what would you say is the most exciting thing that I have to look forward to?
A few things.
Other than the Bank of America saying gold is going to $3,000.
Well, thanks for being a shareholder. I take that seriously. Thank you. A few things to look forward to. We will have resource statements coming out for New Alger and for Parbec by summer, hopefully sooner, as soon as I can get the engineers, to finalize. Those resource statements are going to look a little different. They're not geological resource statements. They're not the full extent of the mineralization on the property. What those resource statements are going to be is open pit based, an economically derived open pit. So that's going to tell you the mineable ounces today sitting on the property. That's a very different, that's like we're not comparing apples and apples anymore.
Yeah.
So it'll be something that my job will be to educate shareholders what they're looking at, but those will be the mineable ounces that sit on the property today. I think for the eyes I have watching, we're on third base. We're not batting. We've batted. We've advanced.
You've already hit a triple?
We didn't hit it as a triple. We went base by base. We did it the hard way.
All right.
But we're kind of at third base, and the third baseman coach is like this, don't go anywhere. So we're standing at third base, and people are watching. What'll it take for us to get the home run? Well, the first step is those open pit resources, because once those hit the market, the assets look different. The assets are very de-risked in the eyes of a miner, because now they understand. An engineer wrote this report.
Yeah.
There's engineering behind it. You could really build that mine.
Yeah, it's more than you and I just talking. There's data.
And it's not geologists talking.
Yeah.
So it's data. It's an economically derived number.
Got it.
So that's a big game changer. Another game changer is going to be when we blast at New Alger. Once we demonstrate, we're going to do some characterization studies right now of rock samples to see how they can be processed, to come up with the kind of mill we need to hire to process the rock. Once we do that blasting and that mill processes that rock, I can't tell you what it's going to yield. We need the characterization work done first. But be it 10 ounces, be it 100 ounces, be it 1,000 ounces, it doesn't matter. We will have a saleable product. And if that works, or when that works, that changes Renforth from being your standard exploration company that has to keep financing via private placement
to funding.
to being self-funded.
Right.
And that's how mining used to start. The mine at New Alger is a perfect example. The Thompson Cadillac mine, the discovery veins were where it was discovered. There's a historic blast pit, which is where we will blast first. That's how they funded more exploration. They went to the north, they found the Cadillac break itself, they sunk 2 shafts on visible gold. That's how they've built a mine.
There's a fault there, isn't there?
There is. The Cadillac break's a giant fault, and then there's a cross-cutting fault between the discovery veins and the Cadillac break.
Now, is there a typical ratio of the amount of gold that a fault can hold?
No. The thing about the fault, the reason the fault's interesting, the fault's the corridor. So this gold came up in fluid, and as the fluid cooled, the gold's left behind. That's the I'm not a geologist, very simplistic explanation. Don't email me about that. But the conduit is the fault.
The pipe. Conduit's
the
like
pipe.
A pipe, yeah.
Right. So the next door mine, they found the Cadillac break is the established big fault. That's a big area where 2 big geological bodies met and ground, and volcanic fluid came up, and that was that. Yes, magma. But that is the big structure. And there's gold in the volcanics, the Piche volcanics on the edge of the Cadillac break. The Cadillac break itself is the ground up kind of grunge.
Right.
So our gold is largely in the Piche volcanics. We did find a little bit recently in the Cadillac break, which is a new discovery on the property. Next door, they had a cross-cutting fault. So that produced a chute. It's like a tube.
Yeah.
And they mined that chute straight down, 1,500 meters, 1.5 kilometers.
Wow.
They followed that, and there was gold in it the whole way down.
Wow.
So for us, we've got gold down to 410 meters. The more money we spend, the more holes we drill, the more we learn. We know there are cross-cutting faults on our property. We see them in drill holes. For example, we press released hole 40. We went through the number 3 vein. That's the deepest pierce point on the property right now. Number 3 vein is in the Cadillac break. So you go in the Cadillac break, the rock got crappy, we pushed through it, got through the number 3 vein, rock got crappy again, and we lost the hole, because we can't, if we lose a hole, we can't bring the water back up. We have 500 meters of steel rods stuck in the earth, and it's expensive. So we pulled it all out. But the reason we were losing the circulation, losing the water, we were probably right beside another fault.
Makes sense.
So we have to find the faults without blowing up our drill program, and then start to. So the fault has 4 sides. Which side is the better side in terms of where did the fluids end up sitting?
Is this a place you can drill all year?
We can drill all year. We can drill. New Alger is a beautiful property. The discovery veins are at the top of a hill, about 30 meters higher, 35 meters higher than the relief. Trans-Canada Highway runs right through the property. We pull off the Trans-Canada to go to the north, the old mine's on the north side of the Trans-Canada, and then it runs under it. So you're saying I just talked about an open pit mine and I'm right beside the Trans-Canada Highway. How does that work? Well, discovery veins are on top of a hill. It's about 30, 35 meters high. There's a tunnel between the number 1 vein, or the number 1 shaft, and the discovery veins at 300-foot deep level. So once you get down 300 feet, you're joined to the main mine. And we don't build mines right on top of mineralization anymore. We go into the ground away from them and, mine it more efficiently. So, we can drill year round. We can drive there year round. No helicopters. Drill crew sleeps at home, so the drilling's really cheap.
Wow.
Geologists stay in an apartment in town. It could not be more logistical advantage.
Yeah, that's, well, I've invested in some other situations that are much more complicated. So let's talk a little bit about sort of the strategy here of getting your 2 main assets sold and then transitioning that money into other projects. Is that the game plan?
Yeah, 1 or 2 of the main assets. I could see Parbec being sold sooner than later as a standalone asset. The suitor is obvious and next door and currently doing their own due diligence work. So we let them continue that and we see where it goes. Of course, they're not the only suitor in the area, and Parbec's a surface gold resource. Were that to be sold for a price that it's not going to happen today, the market's not there, but were it to be sold for an appropriate price, what I could envision happening would be a percentage of that money dividended back to shareholders, to allow them to enjoy some of that success.
Yeah.
And then the balance of the money back into the ground, like our 90% track record in the ground goes.
Right.
That would move New Alger further along, and or Malartic West and Nixon Bartleman, but the cost to work at Malartic West and Nixon Bartleman, due to the stage we're at, are much lower.
Got it.
New Alger, we have a ton of depth potential. We have a secondary mineralized structure. I'd like to drill from the south and go through both, and that's deeper holes, and it takes money.
Got it. Hey, buddy, what's the latest with COVID? And obviously what's going on right now in the world? How has that affected Quebec? And
Hey, buddy.
sort of.
He's a big boy. He's a good boy. Quebec shut down mining. Then they reopened mining last Wednesday. So the mining companies are spooling back up. It's an interesting idea, all these mines worldwide, which have been shut down, and this could be a driver of the gold price. How many of them are going to reopen smoothly and resume production? That's a big question mark. We don't know the answer.
Oh, and of course, physical demand has gone through the roof.
Well, physical demand's through the roof. The physical premium is in excess of $100 if you can even get it.
Yeah, while they're shutting down mines, and even though there's some reopening, there's been a clear issue with the supply chain.
Oh, for sure there's an issue. And people are taking orders and not getting delivery.
Yeah.
So, our own mint shut down and is making hand sanitizer now. They're not making gold, they're making hand sanitizer at our own mint.
Yeah.
So, mining is back on in Quebec. Exploration is still not back on in Quebec, which is fine because the next work we want to do, we stopped drilling in mid-March at New Alger.
Okay.
And we've press released all of those results. But that was what we wanted to do while the snow's on the ground. There is still snow on the ground in northern Quebec, as sad as that thought is. And we are...
Nate, don't do that.
There's a stick.
The camera probably moves, so when you pulled the stick underneath the thing, that's funny.
So
anyway,
exploration hasn't resumed yet, but our next work, we need the snow off the ground.
Okay.
So we're not too stressed. The first property we will work will be New Alger, and we need the snow off the ground to do the blasting.
Got it.
It's cheaper to let it melt than it is to clear it. In Ontario, we have no limitations on exploration itself. Again, we're waiting for the snow to be gone, but in a couple of weeks you'll probably see us active in Ontario.
Okay.
And in the meantime, we've commenced some metallic screening at Parbec, and we're about to send the processing characterization samples to SGS Lakefield for New Alger.
That's a lab.
Yeah.
Can we discuss the Cadillac break? And there's an old rule of thumb from the prospectors. Did I say that properly?
Yep.
All right.
So Cadillac break runs from Kirkland Lake in Ontario to east of Val-d'Or in Quebec. The Cadillac break, so that's give or take 300 kilometers of structure which is gold bearing pretty much its entirety. The old prospectors, the speculators, their rule of thumb was that every kilometer of the Cadillac break represents 1 million ounces. Now that's partly derived, and it's not too far off the mark. If you take production to date and current reserves and resources, you do the work, you add all of that up, you will be able to verify that rule of thumb. So the old guys, without the benefit of doing all the math, we're not that far off. So we're well positioned. We have just over 3.5 kilometers of the Cadillac break.
Okay.
I'm not telling you we have that much gold.
Yeah.
That is not what we will tell the people, but we're certainly in a good place.
What's the old way of blasting, the old school way of blasting, and why is that beneficial?
Well, the old school way of blasting or mining was they would blast, they'd take the rock, process it, that would pay their people and give them the funding to do another blast.
Right.
So it was a cumulative process that built the mines, and you see that in the infrastructure that's left underground. The mine follows the veins. Today we do feasibility studies, we get banks involved, we get a whole bunch of money up front to build plants. Yeah. Renforth's not going to do any of that. There are a few reasons. First of all, Renforth will never build a plant. There's lots of existing today toll milling, meaning toll milling means people will process your rock and charge you to process it. They'll give you the gold that comes out of the rock. They're charging you for the service of processing. So there's toll milling capacity, which saves us from ever having to build a plant. The other reason we won't go the feasibility study today is we're going to blast first and see what we get in terms of gold, see if we can self-fund, and then follow, and then follow that process. And there have been other mining companies get started that way.
Okay.
I was talking to an associate about Wallbridge. They did that originally.
Yeah.
The other neat thing about where Renforth is there's an ounce deficit looming, meaning it's the job of the mining companies to, as they sell ounces, replace their ounces, typically by exploring around their own mine. But if they can't, they're going to have to go buy those ounces
Right.
close to their mine in order for it to be economic.
Where they have the infrastructure.
Where they have the infrastructure. So later this decade, you have, based on the public numbers right now, you have La Ronde. Their life of mine ends in the later part of this decade, as does Globex, as does Canadian Malartic. Those are all Agnico assets with the exception of Canadian Malartic, where they own half of it.
So are you telling me that Nicole might be interested in more ounces of gold?
It would be a logical conclusion, yes.
Okay, got it.
Yeah.
Just wanted to trim the fat there.
You can trim the fat. Yeah, no, that's a logical conclusion.
Is there anything, because I'd like to
I'm going to pause you for 1 second. There's also
Sure.
a historic mine coming online. Wesdome is trying to bring Kiena online.
Okay.
Arguably, they have a bigger plant than they have a deposit. So for them to bring that online, they're going to be needing to look for ounces soon as well. Because a lot of these mines are getting really deep. La Ronde, our neighbor, we're joined to the northwest, they're 3.5 kilometers deep.
Yeah.
Canadian Malartic, the Canadian Malartic pit's only ever meant to go 200 meters deep, and they're past 100 now.
Yeah.
But as these guys get deeper, or they have to shift to underground mining, things get more expensive. The ounces have to be of a higher quality.
Right. You need higher
Kiena
grade.
is a deep mine. It's a mine under a previous mine. Lapa, which was a deep mine, has just closed. So Agnico's lost the production from Lapa. Mm-hmm. So yeah, there are lots of interesting things.
One thing I wanted to talk about is how active you are with your current shareholder base. You sort of, I know lots about building communities and online communities, and you sort of have done that with your own shareholders, and that's something I talk to a lot about with clients is sort of, to try to build a community within your shareholder base, and you've done that.
Yep.
You want to? How did that even start? I mean, it was just just your passion going into it.
Yeah, you could say that. Passion and frustration and being Scottish and cheap. It's easier for
and transparent too.
And transparent, but it's easier for me to write down what I'm thinking or what I want people to understand and send it to them myself.
Yeah.
Than it is to coach somebody how to do that.
Yeah.
And have to edit their work. That's just not efficient.
Yeah.
It's
nice to hear from the the CEO too.
Well, they're Renforth shareholders like myself, but
Yeah.
they don't have the benefit of, like myself, understanding the bigger picture.
Yeah.
They don't have the benefit of necessarily having the understanding of how this business works. This is a business like any other.
Yeah.
There is a business plan.
Sure.
But the terminology and what we're doing it's not something a lot of people can necessarily read between the lines of a press release, which is written to satisfy lawyers and regulators and accountants, and can be a little dense.
So you could have a more organic, personal feel and engage.
Use smaller words,
Yeah.
Tell people what's going on, tell them what was important.
Yeah.
3-page press release probably has one really salient thing that they should be aware of.
Yeah. Well, I think we should leave it there, and hopefully, you come back in 4 to 6 weeks, and we'll cover a few other things that I want to talk about. Maybe we'll have a little bit of an update of what's going on in the field, if anything's going on, and where we're at with COVID, and hopefully the pool will be open and it'll just be hotter out. Maybe like 15 degrees. We'll take it. So thank you very much for doing this.
Thank you.
And we'll catch up with you soon.
Perfect. Thank you.